Well, there's a new junior miner in town, more specifically, NQ Minerals has just listed in London on the ISDX. It's involved in North Queensland in Australia in the Ukalunda and Square Post projects, which is basically gold, a bit of silver and some copper as well. And it's just raised £1 million. Well, we're joined now by the chairman of NQ Minerals. It's Brian Stockbridge. So, congratulations. The listing seemed to go well. Did it go better than you expected?
Yeah, thank you. It went much better. I mean, we were initially looking for £500,000, and we've raised $1 million, and there are still people that wanted to get in at this level. So it's been very successful.
So, what's it going to be used for?
And what's it going to be? Well, basically, it's very difficult to raise money for small companies, and it's very, very difficult to raise money at the moment for companies in the resource sector. So the £1 million is going to be used effectively to push the company's operations forward. But what we've got here is a pretty unique situation. So it's based in Australia, so it's obviously a politically stable country. There are very well-established property rights. But it's in the Charters Towers Gold Province in Australia, and that province has already produced 20 million ounces of gold. What we have is a very large area that we have sort of gold, silver, copper, lead and zinc. But the key thing about this company is that the tenements were owned by a very large Australian company called Sons of Galia. That was Australia's third largest gold producer and the world's largest producer of a mineral called tantalum. So in the research report we've released, it says there was about $10 to $15 million spent over the last 35 years. So what we've got is a tenement that has had a lot of extra resource spent on it in financial terms. There's 10,000 kilometres of drilling that's already been there, and it has identified some fairly interesting and high grades of gold, silver, copper and lead. So what we're doing here is we're actually re-drilling some of the previous drill holes, because the drilling that's already taken place by other companies is too old for us to include as a JORC compliant resource on our balance sheet.
So what you're hoping to do, though, is existing resources there, you've got existing infrastructure, that's going to reduce the cost. But I suppose it does depend on, is there enough asset there, is enough mineral there to actually start to generate income sooner rather than later?
Yeah, and that's another unique thing about the company, because we actually have, I would say we have more than this, but say three key large areas of potential. The first is that we have a stockpile of silver which is sat on the surface. So what we're doing now is taking the necessary steps to get the permits in place to actually process that silver stockpile. So the costs of producing the silver are very, very low because it's on the surface. And we hope to be generating cash flow within a year or so. So we've gone from a sort of an exploration company to a company generating cash within a very short space of time. In addition to that, there's obviously a mine underneath that big stockpile. So that's a key area to look at. Another area is copper. So we have a large exposed copper footwall, which appears to go back about 30 meters or so into the mountain. So what we can do there for the cost of about $200,000 Australian dollars is to do some drilling on that to find out exactly how large that resource is. So any one of those two things is potentially a company maker. We also have a very interesting gold opportunity at the Square Post tenement that you mentioned earlier, and again that's has a lot of potential. So it's very interesting that we've got a number of different minerals. So the risk is sort of diversified amongst a larger proportion of different minerals. They're not all in the same place, making production difficult. They're all sort of spread in their own distinct areas. And we have a tenement that's had a huge amount of money spent on it in the past.
Yeah. So it's looking quite promising. I can't help wondering, well, why an ISDX listing? Why not go for something bigger? Why not go on to AIM?
Yeah, it's interesting, and I think it's a question that a lot of smaller companies face, because if you're trying to raise money, it's obviously very difficult to do so. But do you want to be spending £500,000 of cost to get onto the market and then commissions on the funds raised? So I think AIM is a successful market. There's no doubt about it, and it's certainly one that attracts a lot of the institutional investors. But the team at ISDX, the new commercial team there, are very, very proactive, and I think they're sort of reinventing themselves. So it is a fraction of the cost to get onto ISDX, and ISDX operates in a similar way with market makers. So it's really a sort of a cost exercise, and also I think that ISDX is up and coming, and people should really focus on the companies themselves rather than the markets that they're listed on.
Yeah. So one of the issues there, of course, at this sort of level of funding is getting the liquidity. And I know that you've done something which might be seen as quite innovative in terms of crowdfunding as well as the listing to get more retail investors involved.
That's right. I mean, liquidity, it's an interesting area because a lot of people say, AIM's not liquid or ISDX isn't liquid. But liquidity is company specific rather than market specific. So, I often see companies with, a lot of tax driven investors that need to hold their shares for a period of time, or you have a 90% shareholder. Now, it doesn't matter where that company's listed, it's going to have no liquidity. And there's in the small cap area, I think it's important to, try and open out IPOs to the man on the street and the public at large. So
has it done that? I mean, has it actually achieved that, or is it a kind of token gesture at this stage?
No, I think it has. I mean, we used InCrowd, which is a funding platform that I run effectively to open up IPOs to everybody and make things more liquid. So this is the start of the hard work. So yes, we have a number of smaller investors in there, some high net worth investors, but I would expect that to increase as we move forward. I mean, this is the first deal that has been funded really through using this InCrowd platform, and it's gone, as I say, tremendously well. We'll continue to move forward, continue to try and get more people engaged in the story as the company progresses. So I would expect to start to attract some of the institutional type shareholders as well as the company grows. But I still think it should be open to the public at large. Well,
we shall look with interest to see how NQ Minerals and indeed this crowdsourcing approach actually develops over the coming months. But in the meantime, Brian Stockbridge, thank you very much indeed for joining us.
Thank you.